What is default? Default is the delay in payment of a debt. In case of Islamic banking and finance, all these debts are based on some trade-based activities. Someone, i.e. a bank, has sold an asset to a client on a credit basis, which has given rise to this debt. If there is a delay in payment of this debt, this would be known as default. There is very clear injunction in the Quran on the treatment of default or delay in payment. The Quran says that the lender or the creditor should take a compassionate view whenever there is a delay. Given this thing, in Islamic banking and finance, there has always been a preference for not imposing any penalty in case of a default occurring. However, in practice, this has not been very helpful for Islamic banks. In the absence of a default penalty, the likelihood of defaulting, likelihood of paying an Islamic bank after other debt obligations faced by a client is very likely. In order to curb this kind of behavior, contemporary Sharia scholars have come up with a compromise solution which allows for imposition of default penalty, provided that this money is not benefiting the creditor or the party which has financed a debt-based transaction. The treatment of default penalty very much depends on the opinions held by the individual members of a Sharia board. In almost all cases, other than Malaysia, the central bank or the regulator has not been involved in the determination of default penalty. The individual Sharia boards, they take a view. In the Middle East, the view is that the default penalty can be imposed and it should not be seen as harsher as compared to conventional banking and finance. So even in that case, the amount of default penalty is given away to an independent charity. Sometimes people get confused. Okay, when I say that there is no default penalty in Islam or Islamic law, some economists may object to this. They think that this is unfair for the creditor. This may be seen as unfair to a lender in a conventional banking and finance framework, but when it comes to Islamic banking and finance, there is no concept of loan, i.e. interest-based loan. All the debt-based arrangements are based on a transaction, a sale and purchase transaction. In this context, if there is a default occurring, then this means that in this context, if a default occurs and a penalty is imposed, this means that the price agreed between the two parties must be changed. This is something which goes against the Islamic theory of contracts. At the time of entering into a sale and purchase agreement, both the buyer and the seller must agree unambiguously on a price, and that price doesn't change even when this is a credit sale. In case of a credit sale, if default occurs and a case is made for a default penalty, this effectively means change in the price, which Sharia doesn't allow.